Good afternoon, everyone. This is Girard, managing partner of G9 Financial. Hope everyone is well out there and staying safe as we either turn the corner or get back into COVID-19. Today we bring in a guest speaker, Austin Fitch, a senior analyst with one of our investment partners, Horizon Investments. Horizon is out of Charlotte, North Carolina, and is a key relationship with our compliance team, Cambridge Investment Research. Today, Austin will be speaking about the current political environment and the markets. So with that, Austin, I'd like to welcome you to the conversation, and thank you for being here.
Absolutely. Thanks for having me, Dan. And the political environment that we're in absolutely makes it a perfect time to talk about this.
Absolutely. You know, Austin, one of the biggest questions we get, especially around this time of year, and is around the presidential election is, hey, there's a presidential election. I'm not sure who's going to get in. If so-and-so gets in, I want to take all my money and run. If so-and-so gets in, I want to take all my money and double down. Whatever it may be, you know, and it feels like those questions can never be answered correctly, right? So could you elaborate a little bit on that? On that question and where you guys are coming from an investment standpoint?
Yeah, no, absolutely. And I think it's a fair question. And obviously with the media, just putting that foremost in all of our minds over the last couple months now, and I'm sure over the next little bit here, it's going to be something that continues to get asked. But what I would tell you is something that we've done a lot of research on at Horizon is, just from a history standpoint, there really isn't a lot of data that would suggest that one party or the other is actually better or worse for stock markets and for fixed income markets as well. And again, I think what we would say is that, yes, the two candidates that are currently in the race for the presidency here in 2020, there are definitely differences, right? In policy, there are differences in tax policy, foreign policy. You can think about regulation or deregulation.
Sure.
And what I would tell you is, while they may seem like pretty stark differences on the face, the market reaction is probably going to be much more muted than most folks would otherwise expect. I would tell you that monetary policy, or the Federal Reserve, and their effect on interest rates is actually probably going to be a more important factor over the next 4 years than who's in the White House.
Sure. You know, I remember going back to the 2016 election, there was a lot of volatility before the election. And then there was some volatility after, then things took off. I remember going back to my own personal experience during that time was a lot of the research analysts like yourselves was, you know what, all that volatility was baked in. It was already occurring well before the election happened. Do you see that? Is that accurate? Is that happening again? What is the sense were you guys seeing from your point of view?
Yeah, you're absolutely right. We are seeing something similar from a volatility perspective to what you saw in 2016. That some of that's starting to get baked into the market. That you wouldn't necessarily expect massive jumps in really either direction following the election this year, because, like you said, a lot of that is already being considered, I guess is the best way to think of it from a market perspective. The one difference, and I would highlight this, between 2016 and today, actually, and you mentioned COVID earlier, has to do with the pandemic and the fact that there are going to be so many mail-in votes. So I do think we're probably not going to know who wins the presidential election on November 3rd. So you are going to drag that process out a little bit, which, again, could lead to a little bit more volatility than what we saw maybe in 2016. But like you said, a lot of that is already being considered. You actually have option markets today pricing in the fact that you may not know who the president is for up to a week after November 3rd. So the fact that you're already, like you said, already seeing that and folks are already expecting that, we like to say that markets move based on what happens on the margin, meaning that if it's already expected that the market's probably not going to have a big move in either direction if that type of volatility is expected. If it's unexpected, that's when you get those big moves. And I think maybe COVID's a perfect example. You had an unexpected event earlier this year, and that led to some really big market moves. To your point, if we're expecting volatility as we get into the first week of November, you're probably not going to have as much as you would expect because you're already, like you said, it's kind of baked into the market.
So Austin, one of the just points of advice we give to clients is when they start coming to us with questions about, hey, what should I do? Is we say, let's get together. Let's have a conversation about what is going on in your world that you can control. Should we be changing that in any way?
Yeah, no, I think that's absolutely makes a ton of sense. I think what we would say at Horizon, very similar, is really sticking to your financial plan, working with a financial advisor, and keeping in mind, hey, what are your goals and objectives as that end client? What are you looking to achieve with this pool of money that you've invested? Folks that have maybe shorter time periods, maybe they need to be a little bit more conservative or a little bit more risk averse, right? And they don't want to withstand volatility that may or may not occur. But folks that have more time, a longer horizon, those are people that in theory can kind of withstand some of that volatility a little bit easier. So sticking with a financial plan that like you said, most advisors and I know you guys working with your clients are already building out that financial plan. I think that's a great way to really bring it back to the plan, consider what's appropriate for the client, and then make decisions based on that rather than making decisions based on headlines.
Awesome. Well, Austin, you kind of hit some of the points that we're looking to kind of get across in a short little window here. We greatly appreciate your expertise in chiming in on the topic that is ever so popular, especially in today we happen to be recording this a day after the debate on television last night, which was better than reality TV, to say it simply.
Right.
Crazy, but I want to thank you very much. We appreciate your time. We appreciate the partnership with Horizon Investments, and thank you. And for those who are listening to this that have questions or concerns, always reach out to us. G9financial.com is a great way to reach myself or any one of the advisors on our team, and we are here to help in any way we possibly can, help no matter how big or small. Thank you very much for your time, Austin. We appreciate it, and I'm sure we'll be talking to you soon.
Awesome. Thanks, Dan.
Thank you.